Hello, and what's up, everyone? Well, good evening, good morning, good afternoon, whenever you are watching this. Okay, it's been a while since I shared a video. I was caught up with exams and stuff. So let's get back to trading and educational content. So today is one of the videos, Dalai Lama Pattern. I think almost everyone in trading universe knows it. It's a meme pattern, by the way. I saw it on 4chan all around like 2019 something, and then it was trendy in the lockdown period on crypto Twitter. So yeah, I think probably everyone knows it, but still for those who don't know and ask me what is it. So basically it's this one. If you just search Dalai Lama pattern and this GIF will pop up. And that's it. That's the pattern. That's all there is to it. Well, what it simply implies is whenever there's a down move, it will recover. Whenever there's a fast up move, it will recover. Well, I will try to explain like how I understand and why it happens. So this is a normal book, like a thick book or like a thin book. Before that, let me explain what happens when like there's a huge flush or a huge pump. So you see, if all these are limit orders, what happens when there's a sudden market fall? Like it will take all the liquidity down as it falls down. And like this also will be like, yeah, market is suddenly moving down. One side is keep pulling out their limit orders and the market keeps falling or keep rising or keep just say let's keeps moving in one direction. What happens, the other participants are also prepared to like push that market in the direction. So they also do like market orders instead of limit orders. When this flush happens, the market becomes like illiquid. Like even the market has moved only in one direction. There's not much left on the other side because like almost everyone is already in the on the big move. So what happens is like if someone started booking the profit on a thin book market, this will happen. As you can see over here, what happened? This is a thick book, and this is a thick book and a thin book. So thick book are usually when the market is in a range bound or a balance, and when markets pumps or dumps, this is what happens. It becomes a thin book. So what happens like if someone started booking a profit after fast move, so there will be pulled out market orders, sorry, limit orders from the other side. So what will happen? Like it will make it easier to recover the market. If it's a fast up move, it will dump slowly or like gradually. And if it's a dump, it will slowly recover the whole dip. So this is just basic Dalai Lama pattern. We will look at the pattern once again and then we will move to the charts. Okay, so this is the pattern. Okay, I hope you got a good look at it. So let's move to the charts. Oh, yeah, this is the yes. This is the chart. Give me a minute. There's something I need to change over here. Okay, got it. Okay. Now that being said, okay. Currently, I'm trading on Bitcoin. I have shared this trade in Telegram. I'm taking it. I took it. I took a partial around here. Then I decided to make the video. Okay, the whole idea is like this whole flush is like I'm planning like this will be recovered soon. As you can see, this whole pump got recovered. Likewise, this whole pump also got recovered. So that's the idea of like whole the line Lama pattern. Even as of now, on the 4 hours, we are bullish. So it's like I'm going with the idea. So let's take some old examples. Where can I get it? Okay, this one over here. Okay, these are like few examples. Okay, whenever there's a fast up move, like this up move, sorry, this down move, and then when price starts getting rejected, like where this is a proper rejection over here, and then there's this another rejection, and what happens after this? Empty books and it recovers fully. And also there's like this is a fast up move, price starts getting rejected, but no proper displacement. And the next time where there's a break of structure around here, there's one over here, but like failed. Like it's a balance. Yeah, it's sort of balance. It's not a proper example of the Dalai Lama pattern. Like instantly I would invalidate over here or here because like it shouldn't be taking that long. At least there should be a recovery, then it can chop and then move down. But like this is like chop, then came back. That's sort of fine, but that's not how I want to see. If this is a fast down move, then recovery. You can usually target to the last order block or the like last opposite side block or like candle. So this is usually how I target it, like a strong dump, then reaction, and then we are targeting this order block. Again, over here, there is a fast dump over here, then straight price shows some recovery sign, then we target this order block or this order block. Like there's a lot, like when you do it on higher time frame, you can, if there's a recovery process or something of that sort, rejection or anything, then you can go to a low time frame and start using break of structure on lower time frame and use it like it's the multi-time frame analysis sort of thing. Even on 1 minute time frame you can do that. With the Dalai Lama I used to do that a lot. And then like this fast up move, then some rejection, and then full recovery till this order block, and then this was a fast dump, and then we did a Dalai Lama full recovery, rejection, slowly up move, and then same thing. This was a fast up move, then a fast down, then again a fast down move. We getting rejected. Where are we headed next to this order block? Yeah, we sort of went up, but like it's failed one. Then we came back in straight rejection, next order block or this order block. Eventually, we made another pump and we saw some sort of rejection. Next target, this order block over here. Started recovery, but again, there was this fast down move and then we recovered a bit. I was originally targeting this region and then fall, but eventually something happens that happens. But the whole idea is like whenever there's a fast down move or fast up move, there will be a recovery. A fast down move, and then price starts, there's a rejection, then price start to consolidate and then up away. Again, there's a fast up move and some sort of rejection. The rejection happens, some consolidation or sideway move or like slow grind and then a dump again. Again over here, like here, there's no recovery, like price just went sideways. Yeah, this is like slow grind down, not much in it, but it's okay, still one directional or sort of move, then a strong up move, then we saw some rejection, still sideways, but the whole idea is like we will do a recovery. Then a fast down move, we saw some rejections, some slow grind up, and eventually we recovered it fully. Strong pump, then a strong dump, then a dump, then a strong pump. So this is how eventually everything works in the market. It's like this is the Dalai Lama pattern. Whatever happens in a fast move, like one side is getting hammered, the other side will be scared too. And like when the recovery starts, people start pulling their orders. So that leads to a full recovery. You can pick any day, any asset, whatever you want to do, pick it, you will see the same thing. So that's how I like make bias of usually, but like I have like more complicated stuff, or not complicated is the right word, but yeah, like over years, like I have seen like there's something need to be happening, like absorption or something. Then after that, I will look to trade. So it's like more confluence, the better. Like you saw, like this one over here, like this was a fast up move. We saw some rejection, but it eventually failed. So yeah, there are this cases here where you can use different analysis and all that stuff to like avoid being like one directional and like but keep betting on recovery. So you need to set some rules. Not always that gonna work. Like over here, I have like this is a fast dump, and there's no way this gonna be sustaining. So eventually we saw some rejection, some consolidation, and then expecting up move. Maybe by midnight or like next 8 hours, I am expecting price to be tapping over here at least. Then in the morning session or like Korean session or like Japanese session, the Tokyo session, expecting a full recovery. But okay, this is not a time-bound market, so eventually I have a bullish bias because of this whole thing. A strong dump and a full recovery. That's why I will be super bullish for the week. If we want to talk about some different asset, eventually, yeah, like this thing over here, uh, fast dump, and we saw some rejection, and eventually we came back to this order block. So yeah, and that's the thing. Like I was bullish over here as well, because like this was a fast dump, and I was expecting a full recovery and get full of this gap. But like eventually that didn't happen. So it's not like the perfect one, but like whenever there's a fast dump, I'm expecting a full recovery. Fast dump, I'm expecting a full recovery. A fast dump, I'm expecting a full recovery. Eventually that didn't came, but at least till until this order block, it came. So that's the thing, fast up move, and then we saw some rejection, some sideways, and then eventually we fully recovered. So again, yeah, this one didn't happen, but fast up move and down move. This was like few days before, like a fast down move, then some sort of rejection and fully recovered. This is like very clean. 5 minute chart, you can see a fast down move, a full recovery, and this like whole up move. Price started getting rejected, and then we did a full. And again, this is when I traded like fast up move, some sort of rejection, and then we did a full flush. It's like I'm just trying to explain what the Dalai Lama pattern is. It's not a strategy or anything. It's just a meme concept. There's nothing much to it. It's just like whenever there's a fast move, there will be a recovery. That's all there is to it. Mm, But how it gonna happen, where to enter? It's just probably the rejection is the entry point, but like you need some criteria to judge the rejection, or like are there more criteria or more reasons for it to continue upwards, or there still room for it to go down. So yeah, that's why the analysis part is very important. The Dalai Lama is just a meme pattern and explain the theory, but even for that theory, we need some volume analysis to think or like to make a proper entry. It's not like standalone strategy. It's just an idea. Hope that is clear. Let me see. Okay, this is still going good. Just like this trade, I'm gonna be holding for another 5, 6 hours. Let's see. I took a partial, so it's like I'm risk free either way. So let's see. Okay, yeah, there's another thing. Where is it? Okay. So this is my Telegram channel where I share my trades. If I get time during trades, I also try to explain what I'm looking at, and some like one of some of my schematics which I use to enter or close my trades. And like yeah, I also share the whole daily plan from Nifty. I just started back after a long break. You can also, yeah, I also started sharing the Nifty, sorry, BTC plan. The only two assets I trade is like Bitcoin and Nifty. That's all. I don't need much. I'm experimenting with ES for funded accounts. If that goes well, I will start sharing that one too. You can use the link in the bio or like just search Trading Knife on Telegram and you will be there. I don't charge anything, just be there. I'm trying to share things or like to look exactly what I'm looking at. Like there are like you can learn everything for free, but unless you visualize it, there's no point. And it's also holds me accountable for the trades I take, or like to keep me disciplined to make daily plans and not to trade without it. So that's the whole idea. Well, yeah, see you there, or like just subscribe. I will be sharing another free course which will be more detailed on higher time frame analysis and like how to navigate or switch between high time frame and low time frame. So okay, this is it.